Dark traders, come here. Welcome to Dark Web Trading, and as always, my name is Darksins. I normally begin by asking you a simple question, which is why are you here? Why are you doing this? Hoping that you have the right reasons. And then after that, I normally proceed to give you this disclaimer and to ask you to carefully read that disclaimer. Then after that, today we are going to go over the positive and the negative impacts of social media to forex trading. And by social media, I'm simply encompassing YouTube, Instagram, Twitter, Discord, Telegram, all of those social media sites. So we are going to begin with the negative impacts of social media on forex trading because they are there, and these ones are the most dangerous impact. To begin with, there is false information and rumors. See, social media platforms can be a breeding ground for rumors, false information, and market speculation. See, traders may be influenced by unverified news or tips, leading to impulsive and uninformed trading decisions. And once you rely on false information and rumors, what happens is that you're going to make a lot of losses in your trading positions. Okay. After that, social media has been used more often than not for market manipulation, especially by smart money. Unscrupulous individual or group may use social media to manipulate the markets by spreading false information or creating a hype around certain currencies. And you see, when they create a hype, they tend to be very, very convincing to leading you to making some decisions, which that happens to be what they wanted to make you do. And this can lead to artificial price movements that can negatively affect traders who rely on accurate market information. When people are manipulated and they do something collectively, that increases volume in the market. And when it increases volume in the market, volume is what drives price. Okay, so price is going to definitely change. And when manipulation is at place, price is going to change for a short period of time and then it reverses. Okay, especially if professionals or market makers wanted to liquidate their positions. For example, if they wanted to buy an asset, they are going to influence people to sell it by spreading false information or talking bad about a certain asset. And once everybody is convinced and they are selling, what they are doing is the price is going to sell for a short while, and then professionals are now going to buy because that is what they wanted. And that also happens when they are trying to liquidate their assets and sell. They're going to want to make people to buy, and they're going to use social media sites, they're going to use news, they're going to use a lot of things. Another thing with social media impact on forex trading, it leads to over trading and emotional decision making. You see, constant exposure to social media can lead to over trading, where traders may make excessive transaction based on emotional reactions to news or market sentiment. Emotional decision making can result in poor judgment and financial losses. See, that is why when you are starting out, I'd want you to choose one or two groups and stick with them. Don't be in 10 groups. Don't be in following 10 traders or following 10 whatever you're doing. Just have a few, have limited, right? Another thing with social media, it promotes the herd mentality. You see, this is where traders follow the crowd without conducting proper research or analysis. You can see the herd mentality is mostly used in cryptocurrencies, used to manipulate people in stocks and even in forex. This can lead to exaggerated market movements that are not necessarily based on fundamental or technical analysis. So you might want to make sure you are not part of the herd, but you are a man of your own, right? You make your own trading decisions without being influenced by external factors. that are, for example, being influenced by people. The only external factors that can lead you to change your trading decisions in a proper way, that is when we're talking about fundamental analysis and geopolitical events and such kind of news, those are external. Those ones can influence the way you're trading for the day. See, social media is filled with a lot of distracting noise. See, the constant flow of information on social media can create a very noisy environment, and this one I advise against when you're starting out. You might want to stick to a few sources before you have your hold on what you're actually doing, because you see, when in a noisy environment, it makes it difficult for traders to focus on relevant market information, and distraction can lead to poor decision making, and that can also lead to missed opportunities, and poor decision making leads to making losses, and making repeated losses leads to blowing your account or going broke. Another thing with social media, the negative impact is that you can be hacked, and you can have technical issues. You see, some social media platforms are oh my goodness, to technical issues, outages, or security breaches. Traders who rely heavily on social media for market information may face challenges during such events, potentially leading to financial losses. Those people who normally use signal services from other traders, what happens when your trader does not show up? Okay, when your trader is nowhere to be found, what do? So you might also want to protect your credentials when you are in any social media site, to prevent your accounts from being hacked, right? Another problem with social media is that it creates unrealistic expectations in the minds of traders. You see, there are social media influencers and traders who often share success stories and profitable trades, maybe one or two, three profitable trades, and they create unrealistic expectations in your head, especially among less experienced traders. If you're experienced, you'll get to learn that this thing is not just, you'll get to learn. And you see, when you have unrealistic expectations, this leads to impulsive decision making and disappointment when reality doesn't match your portrayed success. Unrealistic expectations is what makes you think you can risk nothing and win 100%. Unrealistic expectation is what makes you think that you can buy a Lamborghini in the next 12 months. I'm not saying it's not impossible, but this thing takes time, right? It's not that easy as you think. So don't have unrealistic expectations. Keep your expectations at check. Now, that is not only the bad side about social media impact on forex trading. See, the reason as to why I'm here, the reason as to why we are doing this is because social media has enabled us. See, for example, we have these real-time updates. Traders can access breaking news, economic indicators. I access economic indicators from Forex Factory, and that is in itself our website. I consider our website as part of social media. And you see, in geopolitical events, as they happen, you can get to capture them, enabling you to make informed trading decisions. It also helps with market analysis. Analysts and experienced traders often share their insights and technical analysis on social media platforms, helping others to find or to understand the market trends better. Although at this point, if you're starting out, I'd want you to just be your own man and limit the amount of information that is getting into your head, because what that might do is that it might lead into confusion, right? And not all signal service providers or market sentiment analysts, or not all of them are legitimate, and not all of them are there looking out for you, wanting you to make money, wanting you to ditch that lifestyle. No, not everyone is out there for you. Matter of fact, 90% of people are out there to catch you, so be careful. And after that, there's community collaborations. And you see, like Dark Wave, we are going to create a community in Twitter, in Discord, in YouTube, all of those sites, right? So we can have community collaborations, so that you can have learning opportunities uh, in any social media platform, allowing traders to share experience, strategies, tips, fostering a collaborative learning environment. Social media also enables us to network as traders. Traders can connect with professionals, mentors, and other trades, expanding their network and gaining exposure to diverse trading perspectives. Uh, Another thing is you get sentiment analysis from social media platforms, giving you a sense of the market sentiment through discussion, comments, and social media metrics. Traders can gauge public sentiment and factor it into decision-making process. Although I'm not advising on this one, but some people use it and it works for their favor. The ones that I like are these educational ones, like educational resources. You get those, you get webinars, you get tutorials. Like this one is just like almost a tutorial. Many trading experts and platforms use social media to share educational content, like in Darkwave, right? We're going to give you articles, we're going to give you this and that is going to help you improve the skills and understanding of the forex market. People get trade alerts and signals of that. I've seen that in TradingView, I've seen that in Google, I've seen that in Twitter. Traders and signal providers often share trading signals and alerts on social media platforms, giving others the opportunity to follow experienced traders or automated trading systems. And as I keep on saying, I'd want you to be a man of your own. And what I mean by that is that I want you to get into a place where you can make your own decisions independently. All right. See, because if someone gives you a signal and it goes well, that is not necessarily your success, that is their success. And when someone gives you a signal and it goes wrong, they don't get to face the consequences of that. You are the one that gets to face the consequences of that. So I don't really see a win in that. So I'd rather you be a man of your own. Social media, again, is going to help us have global connectivity, give us an international perspective. Traders from around the world can come together, providing a global perspective on forex market and economic developments. And another thing is social media has enabled market transparency and accountability. Social media platforms can hold traders, analysts, signal providers accountable for their prediction and recommendation, especially when shit hit the fan. See, fostering a level of transparency in the trading community. If you send a signal in Twitter and it goes bad, they're going to roast you. They're going to really roast you. Yes, I've seen a couple of people, provide signals to other, and then they give them the wrong advice, to points of telling them to over risk or telling them to go full margin, and then their signals go bad, and then people lose their money, and then they disappear for a short time, and then they're going to resurface later after some time, which is not good. And we don't really have someone to hold accountable such people. We don't have people to hold forex scammers accountable. Some of the laws are not well developed to help capture the crimes or the scams committed in this industry. In most countries, you see, if you are a youth, you get to realize that some of your youth members don't know about forex. So what makes you think the government or the old generation is going to have an idea or have a way to stop such things from happening? Yeah. So it's always dangerous if you don't know about something. If you don't know about something, I always say, if you don't know the rules of the game, then you become a piece in the game to be used, manipulated, misused by the real players however they want. Even the fake players, they're going to take advantage of it. Another one that social media enables for quick response to market changes. There's rapid communication. Traders can quickly respond to market changes by staying connected to news and events through social media, potentially gaining an edge in a fast moving market. So I want you to really be careful about this social media thing. Uh, be careful. Kindly be careful, right? Don't be influenced by social media. Lay low, be low key, learn the skill before you go out there. Don't allow yourself to be pressured by others, by what they have achieved. You might be seeing someone who is in step 20 and you want to achieve step 20 when you are in step 1. You haven't paid the price yet. You haven't done the work yet. You haven't paid the dues yet. And all of those things, you are going to pay the price. You see, if you see someone successful somewhere, they have paid the price. And I want you to remember that 90% of people don't make profits here. So those 10%, so there's a high likelihood that the 10% who are out there, some have fabricated their results to look as if they are making any money. And some might be legitimate, and the legitimate ones, trust you me, it took them time, it took them energy, it took them resources to get there. It took them 1,000, maybe 10,000 trades, and yet here you are, you haven't even executed one single trade or 10 trades in a row. All right, you cannot compare. Uh, trading experience is the most valuable. Okay, someone who has experience you cannot compare with someone who doesn't. Someone who has taken 10,000 trades is not the same as someone who has taken 100 trades. All right, so please remember that and have yourself a nice time. Now you know a little bit more about the forex markets.